Hey, everybody, and welcome to the new series that we're going to do each and every month on trading education. You know, we've been getting a lot of people asking for an additional weekly or monthly review of trading approaches. Now, we already do the stock analysis Fridays, each Friday. So we're all set there. But we wanted to add something where we could add some value and also answer a lot of the questions that we get all the time on software, trading practices, and so forth. So that's the purpose of this series, and we're excited to kick it off. This is the first one, and we're going to do it each and every month. So today we're going to talk about financial freedom, what it takes. We're going to discuss the ART software, which stands for Applied Reality Trading, and go over that. We get a lot of questions on how that works, so we want to cover that. So I'm going to switch off the webcam here, and I'm going to go to the actual PowerPoint that I've got for today. And if you have any questions, feel free to ask them in the comments area. And of course, this will be recorded, and we'll put some links in the recording below. And if we think something's worthy enough for a link, we'll put it in the chat here during the live presentation. So whether you're watching the recording or watching the live presentation, we'll be able to help you with that. All right, so let me go through, we're going to be here together for about half an hour today, 30 minutes. So I'm going to move pretty quick. But again, if you have any questions, feel free to ask. All right, so one of the things I have to start off with are just letting you know there are risks involved in trading the financial markets or investing. Nothing's guaranteed. We work in a realm of probabilities. So past performance doesn't guarantee future performance as well. We want you to realize you need to know how to do risk control. You know, I've got several books out on that topic, and it's important because not every trade ends as a winner, right? So you got to realize that. But there is risk. You can lose some or even all your money trading the financial markets. Day trading, I think, is harder than position trading, so it requires even more skill, but usually the same tools. So that's the good thing. All right, so let's go on here. If you don't know me, my name is Bennett McDowell. I'm president and CEO of TradersCoach.com. I created the ART trading system. I've been trading for over 30 years. The actual TradersCoach.com website started in 1998. It was incorporated. We incorporated the business in 2000. We have over 45 domains that go back to TradersCoach.com. For example, if you type in Applied Reality Trading, you'll end up on the TradersCoach.com website. So we've got it pretty covered in terms of if you forget anything, just type in the name of the product and you'll probably get right back to us. But great, we've had a great time doing this. I've worked for some major institutions, Morgan Stanley, Dean Witter, Prudential Securities, and traded for high net worth individuals as well there. So we've got currently people in over 85 countries using the Applied Reality Trading software at this point. All right, so let's talk a little bit about trading in general, okay? When you enter the financial markets, and I just want to let you know what you're up against here. You're basically got to remember that you're going to be trading against the best in the business. Very smart people, very financed people, well-financed people, very educated people, people that have been trading a long time. And then you have the institutions, all right, the big money, where they have all the algos and things like that. So you've got to be prepared before entering the market. And we often suggest trading in a simulated environment until you get your feet wet. But, if you're new, and make sure you have a methodology and a structure that you can follow each and every day, because you don't want to bring a knife to a gunfight, right? And you have to have the best tools for the job. And that's what we're going to try to talk to you about today, is getting you the best tools possible so you can compete successfully in this market. And it really is the survival of the fittest, which is kind of a cool thing because it doesn't rely on politics trading. It's not who you know. It's really how, basically, whether you're right or wrong, okay, in the markets. That's all it cares about. And leading up to that right or wrong does require you to have education, knowledge. You have to have the right tools and the right mindset, which is equally as important. So we're going to cover a little bit of all that today. All right. What does it take for your trading business to succeed? Understand you will need to work at it. It takes time and patience. Get adequate financing. All right. Now, let me talk a little bit about this. We get a lot of people that say, okay, I got $10,000. I want to make a living out of trading. Well, I say, okay, that's great. Are you living in a tent? Because that's not enough money to do the job. And also, too, if you have to make a living from this, you have to be more experienced because there's going to be more pressure involved. And you're going to have to be making money. And that additional pressure may be too much unless you're experienced and ready to handle that. So you got to realize that. I suggest everybody just starting out in trading, have some adequate income coming in, view trading as kind of something that's a hobby, and then develop that into a career at some point, okay? That's the way I would suggest doing it, because it can take quite a long time for you to hone the skills to be really good at this. And that's a good thing, or else everybody would be doing it, right? All right, so go through a testing phase. This is some of the things that take some time in trading. When we have a strategy or an idea and we begin to implement it, test it. Test it on a large number of trades. When you talk about a casino, what they do is they basically have a very small edge, but that edge works over what they call large numbers. And so if you can test your approach using a large sample size, like 100 trades, then you're going to have a more accurate feel on what your results are. If you test the trade on 10 trades, not so much, okay? So you got to use the average of large numbers. That's really important. All right, and look at trading as a business and start it for the right reasons. You want to have your heart into it, all right? You're going to have many, many setbacks. Trading's not easy. You're going to get frustrated. You're going to want to quit sometimes. Things aren't going to go right. You're going to have a technical problem. You're going to make a mistake. You're going to put a buy in instead of a sell. All these things are going to happen. I guarantee it. And it's a tough business. So you got to love it. All right. Or else you're not going to stick with it. And can you be successful? You're going to have to work at it. But the answer is, if you have the right tools, all right, and the right support, you increase your odds tremendously, with the goal of creating a proven model that can be profitable. So you want a cookie cutter set of rules, a strategy that can keep you focused and keep your emotions out of the decision process. Very important. And basically, the reason most traders lose money is a lack of structure. They don't have a game plan. And so we're going to talk about that today so you can get help in developing a good game plan. All right. So I really feel successful trading is about structure, and that includes the right tools, the right mindset, the right risk control. Okay. So you've got to be able to handle any situation that the market throws at you and remain as calm as possible. All right, now, because if you don't have structure, everything is really an opinion in the market. You know, everybody can look at the same chart and come to two different opinions about their bias. And so when you have a structured trading plan or a set of trading rules, all right, it takes that opinionation out of the markets, because what it does is it relies on your entries and exits based on the realities of what's going on in the market and the realities of it, basically following your structured approach, which when you've tested it, you know has a positive expectancy. Okay, so that's really important. All right, and again, it all comes down to using the right tools. And the right tools, yes, that's software, but it's also order execution. Are you using what platform you're using? Are you good at the platform? And if you're not good, that's what testing and paper trading or simulated trading is all about. Get familiar with your platform and with your trading approach and your results before going in with real money. Because if you just blindly go in with real money and you fail, you're going to fail for so many reasons because you didn't iron out all the problems during the testing phase. And you're going to be frustrated and probably quit if you do that. So again, use the right tools, but know how to use them as well. All right, so now I'm going to dive into the ART system and discuss this. Now, again, we get a lot of emails from folks asking us a little bit more detail on the ART system. So that's what this is going to do. We're going to go over that. All right, so we go back to structure. All right, and this is what the ART trading system is all about. And this is where it comes to the rescue, because the ART system is all about structure. And I'm going to cover the design philosophies, the core design philosophies, but I'm always asked, okay, does it work on a 1-minute chart? Does it work on cryptos? Does it work on futures, stocks? It works on all time frames in all markets. Let me repeat that. It works on all time frames in all markets. So that's important, because if you think about the fractal nature of the markets, you're going to see the same patterns appear on different time frames and also different markets. So it doesn't matter. And if you have a good strategy, all right, you need it to work on all time frames, on all markets. Our current software works on NinjaTrader, one of our most popular platforms, TradeStation, MultiCharts, MetaTrader 4 and 5, and eSignal. All right, let's just go over what the ART software is all about. All right, so basically we're dealing with 3 studies that we focus on. First thing we want to tell you about is all 3 of these studies are working on actual price. So we're talking about the realities of the market here. So we have pyramid trading points, and I'm going to go over these in detail. We have a dominant or P pyramid, which indicates or shows up when it finds the primary trend. We have a minor MP, which also shows up, but shows up during corrections or in the very, very beginning of the possibility of a turnaround of a new trend. Then we have the ART reversal bars, which are basically used for scalping and scaling out of positions or scaling into positions. And I'll show you what those look like on the chart as well. And then we color the price bars a little differently than what you may be used to. We do color them bullish, bearish, or neutral, but the determination of whether that bar is bullish, bearish, or neutral is going to be a little bit of a difference, and I'll get to that in just a bit. All right, so one of the key points when we talk about ART that I want to make clear is that most indicators that are used in trading the markets actually take you further away from the realities of the market. Most indicators are derivatives of price and volume, and therefore distort price and volume. And they also too require optimization, and basically you set these settings customized on what works based on your current market condition, and then the market condition changes. So now you're even further away from the current market reality. So indicators, while they're good, they need to be used in the right way. So that's really important. So with the art of trading, we teach you to rely on market truths such as price and volume, So your trading is based on real market realities instead of their derivatives. You've often heard me talk about price structure, and we have a new course coming out on that. The art software takes into advantage price structure. So we're going to talk about that and show you a little bit about that. So again, just a summary on the art pyramids. All right. It identifies trending price patterns, and it says special trending price patterns because it really, what it does is it takes a look at the pattern, and I'll show you this in just a minute. And then we take a look at the momentum that forms that pattern. So it really, by the time the pyramid forms, it really is a unique trending price pattern. All right. And it's a high probability momentum setup as well, because it's looking at momentum. And then it's easy to see. It's an icon and it's a label up and down trend. So it's very visual, and it gives you entries, but it also gives you exits. Okay. Also exits. All right. So let's just see really quickly. This is what it looks like on a chart, those triangles there. And if we look here, you can certainly see that, hopefully you can see my cursor, but you might not be able to. But you have green pyramids, red pyramids, and then you have these reversal bars here. And we'll take a closer look at those. But that's how it looks on a chart. And if you notice on the pyramid here, the green one on the far, far left at the lower left side of the chart, that would be your initial entry on this chart. And then notice you have more green colored pyramids, which are labeled as Ps. Those are the primary trends. And then you have MPs here. And we'll focus a little bit more on that in just a bit so you can see the actual detail of that. All right, let me go over what a pyramid trading point looks like, does, and how it forms. So this is an example of a bullish one. And you see these in uptrending markets. All right. And basically, you have on the left side of the pyramid, prices moving up. And that forms the apex, the top of the pyramid. And then you have a move down on the right side of the pyramid. And that forms the pullback, or right side of the pyramid. And then you have another push to the upside. And notice you have a buy point when prices push up past the point or apex of the pyramid. Okay, so that is how you use the pyramid in terms of the buy point where you buy in and where the initial stop is. All right, so what's unique is you can see this pattern several times a day. And if the momentum that formed the pattern is not there, the pyramid will not show up. So it's really important to realize that there's a lot going on behind the scenes when these pyramids form on your chart. So they're very high probability because they're taking into account the pressure in the market that formed the pattern. And that pressure, of course, is momentum. So what happens here is that it also takes into account price structure. So you had a big push up here. Maybe you took out equity up here, came down, all right, but stopped. Maybe there was a fair value gap over here and then pushed back up. So the basic formation of the pattern is fractal in nature. And that means that it's taking into account the realities of the market. So the buy point is really above the apex, which then classifies this as an uptrend, because an uptrend definition is higher highs and higher lows. So, and the stop goes below the key fractal at the bottom, which forms the base leg of the pyramid. So when you look at a chart, you know right away, if you see a green P pyramid and it hasn't been stopped out yet, that's an active trend in place. I mean, how easy can you get? All right, you just look at it and there it is. Now, while the pyramid's forming and prices haven't gone above the buy point, it's not going to be green yet. It's going to be considered an unconfirmed pyramid, and the default coloring on that is yellow, but you can change the colors on all our software. That's all those settings are customized. All right, so that's a bullish pyramid. So if you have any questions on that, feel free to ask. Gene's telling me my pointer doesn't show up in the PowerPoint. Yeah, I realize that, and I don't see where StreamYard gives me the ability to use a pointer. So that's kind of interesting. So we might want to do this on a screen share next time. But in any case, that's okay. I'll talk everybody through it. All right. So that's an example of a bullish one. And we can go on to a bearish one. And basically, you're looking at the same situation. All right. So Bill is asking a great question. He says, good morning. Hi, Bill. How does volume account for what you see in the art software? The only time we're really looking at volume is when we talk about the art reversals. And I'm going to get to that in a minute. But we do not talk about volume in the actual pyramids. What the pyramids are focusing on is momentum. And momentum is kind of takes into account somewhat volume, but it's the definition of momentum is how fast price is moving over time. Now, when you break that down, you have to have some form of volume for that to be achieved, right? But what's more important for us is momentum. And one of the reasons why is that when a trend first starts, it may be a very subtle beginning, and the volume doesn't pick up until other traders realize, hey, there's something going on here, like a new trend. And then the volume picks up. So we're trying to get you in as early as possible. And to do that, we have found momentum to be a really good indicator that we added into the actual pyramids when they form to decide if there's enough momentum in that move to warrant. Because if you have everybody buying or selling, let's say in this example, if everybody's selling and the momentum is high on the sell area, then that indicates there's very few buyers. So you want to know that. And that's the pyramids looking at that before it forms. That's why sometimes you'll see a pattern that looks like, oh, a pyramid should form there, and one doesn't. And the reason for that is the momentum did not qualify the pyramid. All right, good question. All right, so we'll get to a little bit more on one of our other indicators in the art system that does actually look at volume. Also, too, in some markets like cryptos, you don't have volume present. Okay, so that's another thing to consider. All right, so same thing on the bearish pyramid as the bullish one. All right, it's just inverted. But again, very easy to see. And, when you go to draw a trend line, you always have to wait for, like if it's a bullish one, higher highs and higher lows, right? And then opposite for a bearish one. So the pyramid is looking at the same thing. It wants to make sure it's getting you in at a high probability defined point in the market where there is a trend in place and we're not going to go the other way, so to speak, okay? And you see these resistance and support areas all the time in the market. And that's all opportunity places where the pyramid can draw, okay? And if you look in this diagram here, on the left side, we got a bullish trend. And notice where the dotted line is on that left chart that says bull trend begins. Well, a pyramid would draw in there, and that's exactly where you would get in. Opposite for a bearish one. So when you look at that, what you're taking advantage of is price action structure right there. So you don't want to be going into a long trade unless you're sure the bearish trade is over. All right. And the only way you're going to know that is if you have a break in structure. And that's what the pyramids are looking for. Okay. So it's kind of cool. All right. And here's an example of the pyramids in an uptrend. And basically what you would do is you would enter off this first one and then trail your stops up under the bottoms of those pyramids, which represent pullbacks in the market. And that's exactly the best place to do it. All right. That way it keeps you in the trend as long as possible. And then you exit the trend like on the far right here, where it says trailing stop loss exit. All right. Same thing with a short trade, just reversed. Okay. But you see, notice how you can, after that first entry on the left-hand side, notice how the market can go sideways. And I'm going to show you something very interesting with moving averages in just a moment. But notice how that goes sideways, but the trend's not done. Now, if this popped up and stopped you out, well, then you would get out because that might mean the market is changing. But what the pyramids do a really great job of is keeping you in the trend as long as possible and as safely and structured as possible. Okay. All right. Now, that's the art pyramids. Any question on that? Any questions on those? Because now I'm going to move to the art reversals. So remember, the art software itself has 3 studies built into it: art reversals, art pyramids, and art color bars. Okay, so art reversals, let's talk a little bit about that. Okay, so basically reversals are going to be pivot points in the market. All pivot points are not created equal. They're better ones than others. And the purpose of the art reversal is to find those for you. Okay, so we can use those for scalping, and we can also use those for scaling in and out of trend trades. Now, if you're going to use it for scalping, what I recommend is you scalp during a range-bound market, wait for the range to get to the extreme part of the channel or the range, and then wait for an art reversal to show up in the opposite direction back into the range. And then you take it there. All right, so let's talk a little bit about the 1 bar. We have 2 types of art reversals, the 1 and 2 bar. So the 1 bar, okay, is basically a pivot in the market where the market has a reversal on that 1 bar. And usually what happens is the bears drive it way down, and then the bulls come back and close it higher than the low, okay? Now, one of the things that we do with our bars, because I remember I talked about bar color, in other words, whether it's bearish, bullish, or neutral, is that we label those a little bit differently in the art system. What the art system is looking at is not necessarily the close in relation to the open, but how the close is in relation to the entire length of the bar. And if you look at this example here, notice that on the signal bar here, you have a long bottom on it, a wick, okay? All right, so if that was a candlestick, you'd see the wick at the bottom. So basically what we're saying here is this is actually a bullish bar, not even though the you can see on this bar, the close was below the open. Now, why would that be? Well, based on the way we look at it, we're looking at if the bears were in control at the end of the formation of this price bar, the close would be on the lower half of the bar, but it's on the upper half. So that means the bulls came in at the end of the bar and drove it back up. So they were in control. So that would be a bullish price bar, even though on most charting platforms, because the close is below the open, it would be labeled as a bearish. So for you to have a bullish art 1 bar reversal, and this is why it's important to know that, you're going to have a bullish art signal bar based on what I just told you on how art defines a bullish bar. Okay. So that's really important. Okay. So keep that in mind when we see signals. Okay. You're not going to see a bullish 1 bar or even a 2 bar reversal unless the signal bar is bullish. Okay. All right. Ed's asking a question. How would you use the pyramids if you are a long-term position trader? All right. Well, first, that would come into play whether how you define long-term. So you'd want to, for me personally, I'd be looking at daily, Ed, and weekly charts. And so I would be concerned about an entry either based on the weekly chart or an entry on the daily chart, taking into account the higher time frame weekly chart also for trend verification. Okay. So the pyramids would be used to enter based on basically how long you plan or like to hold the trade. Okay. And so that's important. Okay. 2 months to 2 years, you're going to want to use the daily and the weekly chart. In other words, you wait for the weekly chart to give you a go. You want to have a go there. And then you go down to the daily chart to time it. Does that make sense? We kind of do that on Stock Analysis Friday. You know, when I analyze stuff, I'm constantly looking like at the daily and the weekly charts. And the weekly charts can be great, and the daily charts, if they're, you know, in a pullback, I might tell you to wait until that pullback's over, and then, you know, wait for a lower time frame bullish pyramid before going long. Good question. All right, so this is a bullish one bar reversal. Anybody have any questions on this? Now, if you're going to trade it, the trade entry would be on the next bar if it goes above the top of the art signal bar. Okay, so that's important. And Gene, that's right. Multiple time frame analysis comes into play there, and that is going to be something we eventually cover here on Saturdays. Okay. Well, I'm glad you're here, Ed. Okay, that's good. Good to come. You can never have too much education. All right, so this is a bullish one, and then the stop, if you were scalping with this, would go below it. Okay, so the signal bar, when you see an art reversal form, you just don't take the trade. Okay, it's telling you that here's your entry, here's your stop, and then the market's either got to go above it first, and then you can use the bottom of it as your stop, or if it goes below it, it invalidates the actual signal bar and will disappear if it goes below it, in this example, before it goes above it. Okay. Yeah, basically, there's many names, Bill, for this. Bill's saying it looks like a hanging man, and that's true. If you were looking at a candlestick, this may look like a pen bar. Okay. So yeah, that's exactly it. But again, you know, it depends how the charting platform you're using defines bullish and bearish. Now, if you're using the art software, you're going to have the color bars loaded, and it's going to do it for you. So you could have technically, this would look like a pin bar that's bearish because it closed below its low on most charting platforms. All right, now I'm going to talk a little bit about the bullish art 2-bar reversal. Now, in these examples, I'm just showing you the bullish, but it would be opposite for a bearish one. Okay, so the main difference between the art 2-bar reversal and the 1-bar is, if you look at this example, notice where it says number 1. That's a bearish bar. Okay, if you were using the art classification of bullish and bearish, it's bearish, and it would even be bearish on a regular charting platform. So again, we're not going to have a bullish art 1-bar reversal if the price bar is bearish. However, we're going to give you an opportunity, or we're going to give the market an opportunity to see if on the next price bar we get a rebound. And that's price bar number 2. So price bar number 2 on the art 2-bar reversal has to be bullish for it to be a bullish trade entry. All right. But what's different here is, notice where the initial stop loss is. It's not on the signal bar number 2. It's on the low of the pivot point, which would be marked by number 1. Okay. Now, if the low on bar 2 is the same as the low on bar 1, well, it's the same price. Okay. But we have found that this is a very powerful signal, and just as powerful as the 1-bar. And again, if you were looking at candlesticks, this would be a reversal too, a reversal pattern on candlesticks. Now, one of the things that you're not seeing here that I'll tell you is that on the reversals, we are taking a look at momentum and volume on the previous bars before the signal bar. Now, on some markets, like I had mentioned, you don't have volume, like cryptos and things like that. So it basically will switch to momentum. If it can't get a qualification on momentum, it will just see how many price bars in a row before the signal bar fit the pattern. Okay, so that's kind of a little bit of a plus there. All right, now here's what they look like on a chart. Okay, this happens to be a candlestick chart. Okay, so we have a 1B here. All right, B had a lower low, only one candle necessary. The high was above the open. And here's a 2-bar where you had a candlestick again, the low here. So if you were to go long, you'd go long on the top of the second B and put your stop below the 1. All right, the lowest low. So these can be used for scalping. You can use these in prop accounts to scalp as well. All right, there they are again. This is a 1B. Notice a long wick, pen bar, and a 2B. Okay. So, and again, when these type of signals come within the context of the overall market you're trading, in other words, did these reversals come at major support areas and resistance areas? Did they come in a range-bound market at the top and bottom of the ranges? You know, so when you use them, okay, is important because it increases your odds of having a really good trade. So, you know, when you're scalping or even doing any type of scalp trading, you have to look at the context of where these are showing up. All right, if they're showing up in the middle of a trend, then, and it's a powerful trend, then that's not a good time to go short, right? So you want to have them show up at meaningful places. All right. Now, this is an example of trading it in a range. Okay. So you had a range here, and you would go long at the bottom of the range, exit at the top of the range, and you go back and forth until it breaks out of the range. Okay. That's what you could do. Okay. So in this case here, if you went long here, you'd exit here, but I wouldn't go short here on that last one on the right. See that one on the far right where it says 10% gain? If you were to go short there, you're still at the bottom of the range, but you could use that to exit the long trade in case things get a little wonky, right? So that, you know, again, it's how you use them that become important. All right. Now, another aspect of the ART system here is that it's not a black box system because it's going to allow you to make some decisions. And for example, if you had entered on this trade using a pyramid on the far left with an initial stop, then you had a 1B form about 3.92% in the profit area. Okay. Now, would you go short there? No, because you're in a trend up. And that's noticed by the pyramid. Okay. And also, too, you haven't had any price structure to tell you that the trend is over yet. But you did have a little pullback. All right. So if you wanted to take out a, scale out there, you could, or you could scale out on the second one, depending on how many contracts or shares you have. And then you have another one at the number 3 point. Now, as a general rule, my rules and ones I suggest is I usually don't start scaling out until I have at least a 10% profit. So I would not scale out at 1 and 2, but I would scale out at 3. And that's what creates this not being a black box system, because you're going to need a discretionary mindset and a strategy on how to use this and when to scale out. So I think that's a pretty good example, concrete example on that. So if you went long here and the market gave you a big win really quick, then you may want to take one of these two. So it depends on your rules, okay, and how you define it. But as a general rule for me, I don't like to scale out on a trend trade until I have at least a 10% profit. And that's not leaving the trade either. That's just scaling out. Now, likewise, you got a 2B bullish one here right in the middle of the chart. Okay, so that could be also used to add into your trend trading position while your stop, though, is still at the initial stop area. Okay, so again, many ways to mix and match the signals, which is great because that allows you the flexibility to trade within your own psychology, so to speak, your preference. All right. So quick thing on stops. We're almost done here. I just want to show you some of the benefits of the way in which the pyramids keep you in the trend as long as possible. All right. So when we talk about stops, you have to trade with stops. Okay. That's a must. Dollar cost averaging usually is okay for investments, but for traders, it's not a good idea because it increases your risk. It's a very interesting thing. Did a lot of testing on this. And for day traders, especially if you're trading the NASDAQ, if you dollar cost average in and don't use stops, you're going to do well on a lot of trades, but you will eventually bust that account out, okay? Because you're going to get caught on the wrong side of a trend. And that's a fact, okay? So you'll do well, all right, for a little while. You'll make huge gains because sometimes you'll catch a reversal with a large size and you'll feel great. And then there'll be a time when the trend gets you, okay? And you'll lose it all. So you got to be always using stops. Now, here's how the pyramids do it. Basically, you're going to be moving your stops up to the bottom of P pyramids, not MP, P pyramids. Okay, these are MPs, these red ones. And I'll go over those in just a minute. All right, so I find a lot of people use moving averages for stops, but the pyramids actually I find are better because they tend to put your stop at key levels in the market, key support levels if it's an uptrend. Okay, so let's take a look at it and even compare it against moving averages. All right, so with moving averages, all right, they are usually set on an EMA, all right, and they're also usually can be optimized. You know, you can smooth them out. You can, use different lengths. So let's just look at this. So if you looked at this chart here and you didn't have any software loaded, all right, where would you put your stops? Okay, well, you can put them at different levels here and here. All right, when you're using a moving average, all right, you would get out of the moving average or get out of the trade, sorry, when the price is usually closed below the moving average. And this is a 50-day. All right, so you would have been stopped out twice, even though the trend kept going. If you were using a pyramids on this, all right, you basically never technically got stopped out until the trend changed way up here. Okay, so it kept you in longer than the moving average. And if you used a 30-day moving average, you would have been stopped out, what's that, 1, 2, 3, 4 times, okay? Even though the trend was going up. And then, that can be frustrating and lead to what they call tilt. You can get angry at the markets when you find you get out and then you wish you were back in. And here's the 20-day. So these are all popular moving averages, all right? So on a 20-day, you even got stopped out more. So I always found the pyramids were better for trend trading because they put your stop at the realities of the market, which are key fractal areas of price structure, okay? So that's why I think the pyramids are far superior than a moving average. All right, so again, and very easy to see, you just move your stop up, all right? Once you're in a trade, and if you're position trading, you just take a look at your charts at night and see if a new pyramid formed, and if it does, you move your stop there. You're done with the analysis. If you're trading a short time frame, you do the same. Okay, move it here, move your stop here. If you need to do something, you'll do something. Look back at the chart. You don't have to look at every single price bar. Okay, and here's an area where I want to zoom in on and just talk a little bit about the MPs, which are these red forming pyramids going in the opposite direction of the green pyramids. So why are they there? Okay, why do we bother? All right, well, we put them there because they can be used for scaling out. They also tell you, all right, that the trend is going into a correction. Okay, not a change in trend, but a correction. Okay, so you need to be aware of that. Now, if prices form a P pyramid, then it's a change in trend, but they didn't do that. But you may want to scale out at times if prices give you, look at this. So you got this big move up. That's a huge move in a very short period of time. Well, then we had a 2-bar bearish reversal that got triggered. So that gives you an option to scale out. We're always giving you options based on market structure. Then it came down and formed a MP, another possible area to scale out. So you had 1, 2, 3, 4, 5, 6, 7, 8 areas to scale out of a trend if you wanted to. And if you didn't want to, you don't have to use them. But we're going to let you know that these are areas where you're going to see a pullback or at least a range at that point. And that may trigger you to take some money off the table, so to speak. All right. So I find it really helpful. All right. It's not telling you it's a change in trend yet, but it's telling you, hey, we're probably going to go into a range or into a slight pullback. Here's an option to get some of your positions out at a nice profit if you want to. All right. So basically that lets you see kind of how really powerful those pyramids are, and also how powerful the art package is when used with the reversals. So there, basically that's it. And we're also going to include a home study course called the Art Home Study Course, which goes into a lot more detail on how to trade it. Okay. It's a 4-week, pretty heavy duty home study course that you can go with online. So it's all online. So that's included in the art software. All right. Now, do you have any questions on the art software? Because next week we're going to talk about our other indicators called the OWL, PTF, and TLM indicators that are used also to confirm the art signals. So, for example, you've seen me use these on Stock Analysis Friday. But, for example, the PTF indicator will let us know, hey, should we be scaling out now, or should we stay with that trend? The owl is going to help count the Elliott waves and look at momentum. You want a green owl when you take a bullish pyramid. And the trend line master is going to tell you the overall trend. Okay. So those are going to be for next week. All right. So not next week, next month. I'm sorry. Next month. All right. Because we're going to do these once a month. All right. So Gene put a link up in there for the, let me just, I guess, highlight this so you get, make sure you see it. If you're interested in purchasing the art software with the education bundle, go ahead and click on that. All right. And Ed, thank you. Glad you liked the class. I hope that helped everybody out there that's using the art software. It's really a back to basics type of information, because it's good to get back to the basics. Sometimes that's all you need, right? Very good. All right. Glad you liked it, Ed. Good. All right. So I guess, as Gene says, that's all I've got. I'll hang for a couple questions if anybody has any, but give us a like on the YouTube. Again, we're trying to grow our channel. And I want to thank everybody for coming. This was fun. I really enjoyed doing this. All right, so I'll give it a couple minutes. I'm just gonna leave this link up for you, and I'll come in if you have any questions. I'll put a little music on, and you guys can hang out before I close the room. And again, thanks for coming, and we'll see you back here next month. Gene will send out an email of when the next one is. I don't know, Gene, if we plan to do these on the same Saturday every month or what, but if you want to chime in on that, you can let us know. But we will definitely also send you an email out so you don't miss it. And this is being recorded. And if you're watching the recording, the links that you need for this are below as well. Okay. All right. Thanks, everybody. You guys have a great weekend. Thanks for coming. Okay, Gene says second Saturday of every month. Let me just put that up there real quick. There you go. Second Saturday of every month. All right, let me put the link back up. Gene's going to get even more specific. He's even telling me the next one will be December 13th. Thanks, Gene. All right, guys, have a good month, and we'll see you next month. Don't forget, next month, OWL, PTF, and TLM indicators.